Sandeep, good afternoon. Your first cut in terms of how are you looking at the budget, with the numbers that have come in specifically with the fiscal deficit and in turn, if you have to look at the capex, because the markets are really not reading it well now.
As the previous two speakers have said, I think this is a budget which is balancing many things. Focusing on one number is a wrong way to look at and evaluate any budget. Definitely not this one. I think the patient is taking the medicine which the doctor ordered. The patient needed a consumption boost, and that's what is getting administered, and that's a good thing. Capex is definitely not. There's no space for giving a capex boost and a consumption boost in the budget. So simple as that. You have to make a choice, and I think the doctor has made a right choice. So that's where it is. I think on the whole, if the market is falling, well, market and economy are correlated over long periods of time, and in the near term, anything can happen in the market. A lot of things, the kind of run up we have had, that itself warrants a correction in my view for the stock indices, and that's what's happening. And that's also actually in the end healthy for the markets. If market price is correct, that's also in the end definitely a good thing.
You know, Sandeep, while we were listening to your answer here, our studio guests are saying our market's throwing a tantrum. Because
that's what Mr. Mistry said as well, by the way.
Yeah, something which Mr. K.K. Mistry said as well, just from the point of view that, there was this ask to boost consumption that has come in. There is a lot of clarity in direction, PLI schemes, manufacturing, just that broad direction is in place. What is your take on this, Sandeep? Was too much expected, or is there not enough to really trigger that growth that was becoming a concern?
The growth concerns have been there for good reason, and I would also moderate everyone's expectations that just because of this tax cut, that doesn't mean growth concerns will go away immediately overnight. People are not going to rush out and spend to buy cars or biscuits or anything else just because there's a tax cut. People need to earn the income and then do the spending. So in the end, markets always are like a spoiled brat. If you give them one thing, they'll say, I want something more in addition to what you just gave me. I think this is what can be done, and what could have been done has been done. So I would.
What's the view right now, Sandeep Bhatia? Are there opportunities that you can see based on this budget to start shoring up positions from an equity perspective? Or would you wait and see what really comes at the end of corporate season? Because once the budget buzz dies down, we're back to brass tacks.
I think we are always back to brass tacks every day of the week. So I think essentially what my base case assumption is that we see consolidation of the fisc, which has happened. We will see pressure on the rupee. I think that's not being discussed in this on this panel. I would expect continued pressure on the rupee, especially if the tariffs go up globally. One of the ways which countries will move to counter US tariffs is to depreciate their currencies against that. And similarly, even if there are no high tariffs against India, to meet tariff on competing countries, Indian rupee will also need to depreciate. In that, I think exporters will do good, and even as I mentioned, discretionary consumption, Maruti looks good in the near term, especially because there's a pay commission for central government employees and state government employees, which will kick in next year. So discretionary consumption, exporting businesses definitely look good in the near term. The other thing is private banks. Indian fisc remains in a healthy state, and private banks, some of them are very cheap now. And also the overhang of excessive ownership by FIIs have gone away. So to that extent, private banks look good.
Okay.
So Sandeep, let's look at the defense number as well. The FY26 capital outgo at 1.8 lakh crores. If you pull up all the companies as well, don't seem to be taking it really well. How are you looking at it?
I saw a paper which discusses that even the defense spending is lower than the outgo. It's unfortunate that our decision-making and bureaucracy cannot spend the money which is given to them for defense. Our geopolitical situation is very difficult across all most of our land bordering countries. I would think, therefore, I would focus on using the money, spend rather than looking at whether the money has got allocated or not, because almost, I think, out of 10 years, maybe 1 or 2 years, the money was left unspent, what was allocated. So that's good. I think the US will also put pressure on India to buy US equipment. We'll have to see what is on offer and what is needed by our forces. Uh, it and in any way, these things have long-term impact. Even if you make an order today, we know for a long time that even our our aircrafts which are coming from HAL have been behind schedule. So all these are good numbers to talk on a day when the budget is announced. But life is, as you said, back to brass tacks.